It's always useful to try to learn from the people that already had success, from the experts, from the people that are well respected in a space, because then we can potentially shortcut our own learning curve, right? We don't have to make our own mistakes. So I try to get inspired by at least the statements, the bold statements some of those experts make that are not that intuitive. So there is this one stock market expert of his time in Europe. He's called André Kostolany. He said, and I quote, "The one who has heaps of money can speculate. The one with little money must not speculate." So that's kind of intuitive. But then comes the last part. The one with even less money must speculate. Now, this is a very interesting take on things, because what does it tell us? It's kind of referring to a similar idea that you only have to get rich once. So when you're poor, you should take on a lot of risk. Once you've achieved a certain level of wealth, then you can simply dial down your risk because all the returns that you're making with your wealth are already sufficient. So why take on that much risk? You can speculate if you want to, you don't have to. If you don't have enough money, if you're trying to make it rich, then you have to speculate. You must speculate. Now, I'm not sure if I agree with this with every little nuance. And here is why. There are a lot of different ways to come to wealth, right? There are a lot of different ways to acquire the dollar. You can invest, you can try to multiply that wealth, you can sell your time, earn money, you can do all kinds of different things. You can try to build a business and sell it, or simply just generate the cash flow from the business. You can try all kinds of things. Now here's the problem. Different wealth building approaches have pros and cons. When you're selling your time, you have pretty straightforward income. So you might sell it by the hour, you might sell it by the month, but you've got relatively straightforward income that can be anticipated, where you know exactly this is the time I put in, this is the money that I get out in return. Now, when you invest money, that's usually not the case, unless you invest very, very low risk, right? Unless you buy, say, short-term US government bonds. Usually the return is not that clear. Now, besides the certainty of the return, there is, of course, the main issue with selling your time, that you only have that much time available. As in, there is an upper ceiling to it. You can only sell that many hours. And even if you've sold all of those hours, you can try to sell them for a higher hourly rate. But for the vast majority of people, there's a cap there as well, right? How much are you really going to pay the best programmer in the world? How much are you really going to pay, say, the best doctor in the world? Right? You're not going to pay $1 million per working day for a great doctor. But say an outstanding best investor is very likely going to make $1 million per day, right? That's definitely possible if they've already accumulated enough wealth. So there's an upper ceiling to selling time. There's no upper ceiling to making money with investments. But here's the downside with investments. Besides not being very predictable, the issue is that it's relative growth. That's its strength, but also its weakness. In other words, if you don't have much money, then the relative growth you make on your little money doesn't matter that much in dollar terms. So if you only speculate, say, with 2 weeks of your income, right? You just look at your income, not in dollars, but in, say, relative to how much you could sell it for if you were to sell it for work, right? Say you've got 2 weeks of income, and now you're doubling that. Now you've got 4 weeks of income. Now, are you going to double your money within 2 weeks with speculating? It's possible, but it's not very likely, right? You have to take on a ton of risk, and there is a high chance that with the meme coin that you're buying, that is going to zero. So a way more rational approach at that point would be to try to increase your income, to sell more hours, to maybe sell your hours for a higher rate. So I think there is a flipping point here. If you don't have much wealth yet, then I would not treat speculation as a way to get ahead in life, as a way to get more dollars. I'd only treat it either as a hobby or as a learning experience that you're then prepared once you have more money. But the real way, the realistic way to make more money when you don't have yet much is to simply sell more time, is to get a side hustle, for example, or is to change jobs. It's potentially at the beginning to reduce your expenses, I'm not really a fan of reducing expenses. I made another video on this as well. Feel free to check it out. It's titled Lifestyle Inflation. This video is sponsored by the Premium membership. I never take any money from any crypto project. I never take any affiliate links from centralized exchanges. I never pump and dump coins. Instead, I offer valuable tutorials in the Premium membership. Feel free to check it out. So if you are still at the beginning stages, it does make sense to cut expenses and at the same time to also earn more money, potentially with a side hustle, right? If you earn, say, 50% more because you've got another job on the side and you cut your expenses, say, by 20%, now you've got a savings rate of maybe 50%. Now you let this run for a while, right? At some point you will have enough that in the end speculation is really worth it. So I do not buy into the idea that you have to get into the lottery ticket game. So that's the problem, right? I always talk about diversification. I always talk about having all kinds of different asset classes and rebalancing the portfolio and buying the asset that has crashed with the other asset that hasn't crashed and taking advantage of the dips, etc. But all of those things are only relevant when you've already got at least, say, 2 years of income saved up. If you don't have that yet, then don't just throw all of these things away. Still apply those concepts, but at the same time, don't have the expectation that you get rich with this, because of course, in the end, you might outperform just buying and holding maybe by 20% per annum if you're good. And 20% outperformance is nice when you've got, say, 2 years saved up and then you get like 4 extra months, right? That's pretty much the same as having another side hustle. But if you don't have 2 years saved up and you only speculate, say, with 2 months, right? Then what are those 20% extra? It's not really much. And if you want to get more return than the 20%, then the main way to achieve this is by taking on more risk, unfortunately. But do you really want this? Do you really want to start off with a hyper risky investment approach, and will you then be able to drop that approach in case you do get lucky? Right? Let's say you become the Dogecoin millionaire. Let's say you put in all of your eggs into the next Dogecoin. That Dogecoin goes up by 100x. Super unlikely. But let's say you win the lottery, right? Let's say that happens. What are you going to do afterwards? Are you going to be the person that's going to rationally diversify, that's going to take all the profit, that's not trying this a second time? It's unlikely, right? You've been successful with this once, you will try to repeat this. You repeat this until you're broke again. So you have to approach this with a solid attitude. When you've earned your first base capital, then you will be way more prudent in allocating that capital, right? If you didn't just randomly gain the capital, right, through a luck shot, but if you actually earn it through hard labor, then you don't necessarily want to see your overall wealth drop by 50% by putting this all on a single meme coin. Then you're actually starting an investment approach that's solid long-term, that you can still use when you've got 3, 4, 5, 6 years of income saved up. If you've got no money, then speculating in ultra high risk investments, I believe, is not for you for the sake of making money. If it's for the sake of learning skills, if it's for the sake of improving, say, your blockchain analytics skills, then that's fine. But if you expect to become rich for this, I think you're going in the wrong direction. We all want to achieve wealth as quickly as possible, and I can relate to that. And obviously, the lottery ticket is very enticing. But I believe the quickest way and the most solid way is to simply just work harder for 1 or 2 years and then get to that position where you actually have enough money in order to then invest and not just gamble it all away. You can speculate once you've got enough money, but you don't have to even. You can even stay away from the meme coins altogether. You don't have to. Of course, if you build enough skill, if you enjoy the game, if you like to look at the data, and if you feel like you can outperform the market because you've studied the market more than most other people, then by all means go ahead and do those bets, but do them in a calculated manner, right? When you've got 2 years of income saved up, maybe put 1 or 2 months of income in that. Still, right? This is a lot of money, 2 months of income. But if that then goes, say, 10x, now you've got a real gain. Now this is something that's worth doing. If you do the same thing with way less money, then that's a waste, right? It's not really a great thing. And if you only have 1 or 2 months and you put all of those 1 or 2 months in that meme coin, again, the likelihood of this going wrong is very high. But when you actually have a larger portfolio, you can continue doing those kinds of bets for a prolonged period of time. You might have a wrong bet once, but then maybe the next time you do have the right bet, you can stay in the game for much longer. And that, of course, also is very beneficial because over time, skill builds up, and thus the win rate, so the ratio of positive trades to negative trades, should improve over time, right? As you get more and more ahead of the curve. It is somewhat of a boring message. I completely understand this. But safely think about this, right? At the beginning, you have linear growth that outpaces the exponential growth because it's safe, nice linear growth. And then once you're at the reflection point where linear growth doesn't change your relative growth to what you already have that much, that's then when you focus on speculation. That's then when you focus on investing and putting in more time into the relative growth. So at the beginning, relative growth doesn't matter. It's pretty much useless. All you want is linear growth. And then once you're there, then you want to take off like a rocket ship. And of course, take those first 1 or 2 years, take that time to learn as much as possible, take that time to get some experience, use some play money potentially to speculate that once you are at the level that you don't feel overwhelmed by everything. But do not expect that you will become rich in any way, shape or form when you're still at this low level. You're just starting out with speculation, you don't yet have the skills, and you also don't have the money. That you need to build both over the long term, over time, to then be at a point to actually make speculation matter. If you haven't yet joined our Telegram, feel free to join. Looking forward to chatting with you. The link is down below. Feel free to also give this a like. It helps the channel grow. And of course, you can also subscribe. I publish videos regularly. See you next time. Cheers.